Welcome to a thought share on your investments. After having seen your investments a value that has always been higher than what you saw it the last time in 2023, in the last 2-3 months, the experience would have been different. For those who are used to see the investment of the portfolio value every day, you would have seen some days going down 3 to 5% and some days coming up 2 to 5% also. And for those who are not used to see so often, you would have been guessing like your investment has not been going up for some time now. And this would have caused some worries in your mind. Is there something wrong with your investments? Yes, there have been events that have made the market to go slow or turn down from the peak. And this also has brought an opportunity or option to do some changes in the portfolio so that we can make the best use of the current situation. First, let us look at the changes that happened in the market that impacted the flow on the upside. This is to the best of our knowledge. Why I am saying this is there is a high possibility that we can be wrong in what we are judging, and the options that are available now are what we have thought of to make the best use of the current situation. So looking at the challenges, in 2023, the whole portfolio, most of the investors' portfolio went up between 30 to 35% if the allocations were right, that is having exposure to all the segments of the market. So this upside did not happen as the whole market went up. It was a part of the market that did extremely well, while a part of it did not do so good. The part that did well was the mid and small caps that went so high, it kind of formed a bubble. We wouldn't say it's a bubble, but it started forming a bubble and it became so heavy at the top, it started sliding from its own weight. This happened between December to January, and as it was going through this slide in a slow phase, it was not giving up faster because the money flow was huge. People were investing heavily into mid and small caps. Then our regulator came out with a activity to do a stress test on the mutual funds to check how much time a fund will take to liquidate their portfolio in case people come and redeem fully in a fund. This brought real stress into the market. Stocks went down badly. In a single day, we had around more than 5% correction in a small cap segment. So with such big drop, the question arises with a lot of people in the market today, was this stress test required? In a way, looks like it was required because the bubble, what was talked about or thought about, if it becomes big and gets burst, there can be very big damage. Whatever regulator did was, they came in and punctured or pricked this bubble before it got very big. So one of the very famous fund managers in his talk in the last 2 days has said, and I quote, when in the US markets during the dot-com bubble, it was an actual bubble when it was happening. At the time, Alan Greenspan was the Fed chair in US. He said, I think there is a bubble that is going on, but I don't know when it will get burst. Let it go until it goes. That was the way they handled it, and all of us know what happened. That is history. Between 2000 to 2003, the correction, the bubble burst in dot-com was so big, most of the stocks came down 70 to 90%. Whereas now in India, our regulator, due to this stress test has ensured that we don't have a very big bubble and it gets burst at the top and have a big drop. So once this bubble gets pricked, the chances of going down or drastic fall is averted. There is no possibility of a drastic fall because there is caution placed in every levels. At the same time, when a balloon that is going up on its air, if it is pricked, it will not have the strength to go up faster or higher, right? So from here, market is not likely to do a very big jump. Similarly, it will not go down also big time. Along with this challenge, we have this war that is going on in 2 countries of the world, which is not in the mood to get over fast, and it is slowly escalating. A lot of smaller countries coming inside, putting their hands, and things are not looking so great. China, on the other hand, is putting its hand on every corner of India nudging us to get aroused in the north on the China border. Both the countries are having about 2 lakh soldiers aligned there. Troop based placement is there. That is actually very, very big. Already global powers are becoming cautious, because when such big troops are placed there, even a small decision mistake can escalate into a big war. This is one. And elections, not only in India, I think more than 50% of the world is going for elections. In India, of course, the markets have already factored in the present government to continue in the next term. While that is there, the challenges that the country is going to face with the government continuing its term, we already have been seeing these ED arrests, raids and arrests, which has kind of brought some negativity in the people's mind, and this will become even more stronger and higher when the third term comes. That is one side. And along with it, we do have currency problems. Currency is going through a wild swing. These geopolitics will bring pressure to the market, and it is likely to be in a sideways range, or probably stay where it is, or has a potential to go down. In this condition, what best we can do to ensure we make better returns than the market? Let's say market is flat, it's not going anywhere. Currently it's at 22,000, it is not going anywhere. Is there a possibility for us to have a positive return, little better than what the market did? Or in case it is going down, can we have a lesser downside impact? This is what we are thinking of on the options. Before going to the options, one more thought. Businesses in general, how are they doing in our country? This same time, March 2023, 12 months back, the whole economy was looking to go up. That is, almost all the businesses had the potential to give very good profits. 1 year down the line, still the momentum is strong, but there are many pockets which have kind of reached their top or started coming down, while some pockets are having very, very robust growth potential. So from a broad market that is going to go up, now it is going to be pockets that are going to go up. So it requires selection process, where we have to put our money to have the best results. Like in the last 12 months itself, PSU as a sector did wonderful, 4 times growth. What was 13.5 lakh crores of market cap in 2014, today we are at 55 lakh crores. Real estate went up big time in the last 5-6 months itself. Automobiles, huge business growth was there. While these all were the past in the last 12 months, next there are going to be different ones which will come up post the results that come. So when I bring these challenges, immediately there will be a question: is there a threat for the upside growth? Will it take time to go up? Absolutely not. There is no threat at all, because today in the global world, India is the only country that is the most attractive, best of the best. Even in the currency meltdown, we are the third largest, third best. There were currencies which went down, like in the last 2 days, 0.86, minus 0.8 to about minus 0.1 to minus 0.8. In that we were at around minus 0.3. We were at the top 3. So we are not giving up there also, because a huge fund flow is there, FDI flows are there into the country. And India is touted to become a $7 trillion economy very soon. How long? Maybe 3 years, 5 years, 7 years, but for sure it is going to happen. Today we are at 3.5 trillion. That gives a 100% growth potential in maybe 3, 5, 7 years time. No other sector has this kind of opportunity. Only that it is getting slowed down or taking rest before getting on to its next journey. And actually this gives an opportunity, because we know for sure the economy is going to double in the next 5-7 years time. Slowdown is an opportunity for us to buy or invest into this market, because we know guaranteed that whatever money we put today is going to double in the next 5-7 years time. So coming to the options, because there is going to be a sideways or a flat or downside move in the market, what we are thinking of is moving out some part of the holdings that we have in the investment to a place where we can get better returns. So where is that? As the business is slowing down globally and the challenges that are there in the country here, in the domestic, there is one thing which is turning around is the interest rates. Most of you would have heard US is almost getting closer to the place where they want to cut the interest rates. Maybe 3 or 6 months down the line they will cut the interest rate. Similarly, RBI is also thinking about an interest rate cut. So that means interest rate going up is over. It's not going to go up anymore. Even if some situation warrants for it, probably a 0.25% up, which may not happen. Very less probability for that. But going down is for sure. It just will take some time. This is giving a huge opportunity to invest into debt, which can give close to double digit, that is about close to 10% returns in a safest asset, the government bonds. This is where we can take some money out from the equity portfolio and move to a debt market. We have already done 2 tranches of profit booking in mid and small cap. One was in October 23 and December 23. By doing that, we removed 20% of the investments in small and mid cap and moved to large cap, because large cap was a part which did not do well in 23. So that is expected to do well. Again, the reason why large caps will do well is now fund managers will shy to invest into small and mid caps, though fundamentally good results, good earnings, profits are there only in the small and mid cap space because of the regulatory challenges, stressed and all those things. Fund managers will now buy less of small and mid cap, and whatever flow they are having. Today, as of now, we are having around 19,000 crores of SIP book. Every month we are getting 19,000 crores, which is close to about 2.5 lakh crores just by SIPs that is hitting the market, domestic money. Apart from that, bulk money is also huge. We have just crossed the 50 lakh crore mark in the mutual fund asset totally. When they don't buy small and mid cap, they are going to put money into large cap. That is the reason large cap is expected to do well. And quality businesses, not the whole universe of large cap will do well. Quality businesses where high liquidity is there, that's where they are going to put money. So again, there's going to be a selection process required in large cap also. So these 2 profit booking which we did in 2023, October and December, we moved 20% of holdings in mid and small cap to large cap. Now, we are proposing to take out maybe another 10% in both mid and small cap and move to debt, where the downside risk is almost negligible, while upside we can expect about close to double digit, that is near 10% returns. If you are wanting to participate in this switch transaction, please send us a message. We will get the calculations done and initiate the transaction for you. And along with this, since this debt market is giving a beautiful opportunity, which is zero risk, it's totally government securities, government bonds. So downside risk is very limited and upside is very high. If suppose you have a FD or planning to do a FD, that money can be pushed into this debt funds, where bank is giving around 6.5%, this debt funds are giving close to 10%, which is 50% more than the bank interest rate what you are earning on your investments. If not fully, at least 20%. Say suppose you are putting 10 lakhs into FD, 2 lakhs you can bring to debt. That will help you on your overall return, increase the return by 0.7%. For a 10 lakh, around 7,000 rupees. More returns will be there just by having this asset class. So if you want to invest into debt also, let us know. We can get the transactions done for you. Thank you. Happy investing. Going through elections, there's going to be huge news flows. Don't worry about the volatility. That volatility is what creates wealth. So it's going to be big opportunity. If you have more money to deploy into the market, are confident that India's 7 trillion GDP mark is going to get achieved, it is time to invest into the market. Happy investing.